All right, welcome to the 5-Star Podcast. Happy early summer. Okay. All right, here we go. We'll do it again. See, this is how you haven't done it in a long time. Welcome to the 5-Star Podcast. Happy end of summer. We're here with Winston.
Steve.
Kenny, who has the giggles today.
Oh, man.
Richard.
And Amarad. Today we got a lot of topics. I'm gonna pass it to the man who's instigating the first topic here.
Me. Most awkward intro ever.
Was,
all
right. Exciting to do it.
Exciting.
I didn't say it was going to be good.
It's a little rusty. It's all right.
Yeah, there you go.
So, first topic that we're going to talk about right off the bat is some mortgage rules, some new rules that just came through.
Okay, sure. So I thought we were going to talk about immigration, but okay, sure. So we'll talk about mortgage rules first then. So obviously in the news recently, there's change in the mortgage rules. Mortgage rules being that they're now CMHC has now extended first-time home buyers to qualify for a 30-year amortization period. And they also extended the cap from $1 million to $1.5 million. So they can purchase up to a property of 1.5 and still qualify for CMHC insurance. Right? So therefore, if you have less than 20% down payment, you can still qualify and purchase up to $1.5 million.
So more buying power for clients.
Yeah.
It feels like a lot of fluff to me, though.
Why?
Because if you think about it,
Actually, I think it's a really good thing.
Okay, cool.
Continue. Tell me.
I think like with this increase, it doesn't really help first-time home buyers much or for very long, because first off, like if you increase the CMHC and they can buy a little bit more expensive, it's going to push the price even further away from affordability.
Prices will go up, but in the short term, I know for sure it'll affect the people that are just being capped at the $1 million price point, because CMHC says, oh no, I'm only approving you up until $1 million. And anecdotally, like I do have a listing that is experiencing this very situation, because the seller wants just over $1 million. And then most of the buyers that do come through, they're offering just under, because they may try their best, but they can't qualify for more. So that's a challenge. Like if they can get that little more, pay longer, they might just bite the bullet and pay what the seller wants so they can move ahead.
It's like a Band-Aid for bigger issue, I think.
It might help. Like I said, it's short
term. It could help some.
It might help some.
Yeah.
When your point is that like you think it's not really going to do much.
Well, it feels like it's more like a political thing. It looks good on paper. Like, oh, it sounds like, oh yeah, we're helping the new generation afford homes and all that. But
they're buying votes right now.
Think of it like 2 years, 3 years down the road when prices do go up, they can't even afford it. So who's it really helping? It's helping sellers.
Right now, if you were to look at the market today, we study the market and prices every day, right? So if we look at the market today, and a family of, let's say 5, they're currently renting right now, and they have double income, they saved a decent sized down payment, but it doesn't equate to 20%. And they want to buy like a small 3-bedroom, 2-bath bungalow. How much is that worth today?
Depending on the area, like if you're okay with like buying something a little bit older, a little bit, you can kind of fix into it, you can get something like 900 something.
Yeah, so they don't want to do the work because they have no money already to do work.
Well, I mean, that's again, it's a process. Like no one needs to go from like renting to buying like a detached. You know what I'm saying? You can buy,
but that's what they need though, right? Like
you say because there's 5 of them.
Yeah, there's 5 of them.
They're pooling their money together and they're doing the first time purchase as 5 or 6
consider
people.
condo town, like consider other options or live a little bit further away. You don't have to.
But if they wanted to get into like a small bungalow that's 1,200 square feet, 1,300 square feet, they need to get qualified for more than $1 million.
Yeah, 100%. Because most of the homes that are qualifying for more, like they're above $1 million, they have the renovations built into the mortgage. So if the renovation is rolled into their payments, it's much easier to purchase and make a decision, because most of the buyers now, if they see those homes that's a little older, yeah, sure, you can buy it, but then all the renovation cost is out of pocket. So where are they going to come up with the $200,000 or $300,000 that they need to put into the house just to modernize and update the kitchen, washroom, maybe the basement? Because basement or even a separate entrance, some of these buyers require that extra additional rental income to be able to carry the home.
But isn't that more like really nice to have rather than a must have?
It depends on the situation, but for cash flow wise, some of the buyers are taking that into consideration, and there's some have told me said, hey, I only want to look at homes with separate entrances because I want to have that option. Even if I don't rent it out, I have that option to in case.
Yeah, that's true. You're right. But also, I feel like with inflation and our pricing just constantly rising, that million mark is just really too low.
It's a little low, yeah.
It's just way too low now. They have to increase it.
What do you get for $1 million?
Yeah, like they have to go up for anyone to, like a family that hasn't purchased yet, that are living in like say a 2-3 bedroom house and they want to get into something, they need their options, right? And condo townhomes are not always like the best options for what they want. It's good. I think it gives more options, more flexibility for first-time home buyers. Also, even with the 30-year amortization period, there's some pros and cons to the 30-year am.
What are they?
Well, you were talking. Why don't you highlight some of the cons here?
Because
you're
I want to hear from
talking
you. I'm asking.
You think it's a good idea to stretch it
I
out
think,
to 30
you know what,
years?
honestly, for first-time home buyers, I think it's a great thing because, you know what, like it lowers their payments. It gives them more borrowing power, right? Because the ratios are much more flexible, right? Because if their payments are lower, the ratios actually make more sense. And if they get into a property for the first, 3-4 years, right? You buy a property today, is it going to be the same price that you bought it for 3-4 years from now or 5 years from now, right? Is it going to be the same price?
They're just going into more debt, right? Because
But that's not the case, though.
You're paying less principal and more interest over 30 years now. And so that doesn't really benefit the first-time home buyer. Do you know what I'm saying? For the debt and affordability. You're
right, but it's about getting into the market and getting yourself started, right? So you can get into like a condo or, something smaller now that isn't your preferred property, but you can still live in it. It still meets your immediate needs, maybe not your long-term needs, but you can still fit that within your affordability and get the mortgage approved, and then later on you have the equity built up. Now you can
just to get into the market,
you can move into something better, something bigger, and also qualify for a 25-year amortization period. Versus like 30-year.
I agree with Rich, because when do you find people like living in a home and paying out the full mortgage, like the lifetime of 20, 30, 35, 30 years? Sure, you're going to pay more, but by the time you get to maybe the first renewal, 5 years, 10 years, you're looking at other options. Like once you build equity, like you said, and perhaps maybe move away to it, depending on your job situation.
Yeah, when you're better off, you could lower the amortization at the next round, right? So
yeah, exactly. You can always change it when you renew it.
Yeah, you're right. It's just getting in is the hard part, and just solves
that's true. And also, there's usually mortgage products that allow you to top up or put up to 20% of the mortgage value or something like that in the end of the year. So there are other options, but I do agree with you. It's a great way to start to get into the market and move up the property ladder.
Yeah, so use up that step up process, right?
Yeah. So do you think like this is really good for like first time home buyers just to kind of get into their first condo, first investment sort of thing? And then
I think that $1 million mark was not realistic anymore. Even just getting a decent townhome in way up in York region, it's minimum like over $1 million.
Yeah,
it's like 1.1, 1.2 for something decent. So this has to be. I think this is a necessary change. I think.
Yeah. So that's one of my point of view. But like, I get that 30 years. If you're thinking like, okay, this is my long-term home, my 10, 15-year home, which is, honestly, with a lot of first-time home buyers, I'm not sure what your experiences are, but I find with first-time home buyers, they have like their beer budget, like, numbers that they have. And they want that Cadillac, right? They want that Mercedes, right? They want their dream home.
They want the flash
They want their dream home to fit in this, whatever, $800,000, $900,000 budget, right? And that's just not reality, right? So we have to educate them sometimes. We have to go through the step-up process, right? So you buy something now that you can afford that's going to meet your immediate needs, and then let's step you up into that.
Or just be the bad guy and just say like, hey, you can't afford this, man. Don't buy that.
Well, you have to be.
No,
though,
but
right?
you have to. But you have to.
Then you're wasting your time, right? By showing them things that they're.
No. Even if they can't afford the home, like you still gotta
you
curb their expectations. Like, hey, you know what? Just don't go for the flash right now. Get a little down the road. It's okay to be in a Civic. You know what I'm saying?
It's not curbing. They take it as
or a Accord. Come on.
Or a
Camry. Those are my cars.
So you just crush their dreams.
I love them, man. I love them.
You're crushing their dreams. That's how they interpret.
But it's still our job to navigate them through the market and helping them get into what they want, right? And that's our job, right? So that's my point of view on the mortgage rules. Any other additional views on that?
Well, I mean, just to kind of talk about the some of the cons of it. Like, again, sure, you get the advantage of kind of being able to get into the market, but also now you're tacking on so much more interest rates. Let's just say like your payments a lot of it does not go to your principal. So are you technically saving? Not really. A lot of it does go straight to the bank's pockets. So are you building a lot of equity? Not really. But it does get you into the market. So maybe in 3, 4, 5 years down the road, let's say a single guy buys a home or a girl, and then they meet a partner, meet a significant other. Now they can pool. There's already a property. Then they can leverage that and move on, move up.
Yeah,
But
it's
at least
it's a stepping stone.
yeah, it's a stepping stone. So there's a pro of that, but are you building a lot of equity with it? Not really.
Well, I mean, I think I disagree on that. I mean, are they renting? What they're renting? Are they making equity?
No,
Is
they're building some equity.
Are they building any equity?
Yeah. So I mean, that's what I'm saying. Like, but are you paying the same price though? Right? Like,
Okay, sure.
right
It's
now,
not-
rental might be a little bit lower than
For
actually
sure.
owning a home.
You're right. You're right. So the thing is that the equity that they build up on their mortgage or paying down their principal is going to be much slower, but there's still the opportunity of the property
agree.
increasing in value,
Yep.
Appreciating.
right? And that's where you sort of bank those few years on the growth of the property value. Yeah. And then you then take that growth and move into something different. Or renew at a better rate, or renew because you have more equity than built up in there.
I would even argue, go a step further, saying that aside from appreciation, you're getting much more benefits than just renting. Because if you're say investing in the stock market, you're renting. So some people have this model of renting and investing in the stock market. You can only say double your money on how much you invest. But whereas if you actually get a mortgage, you're banking on appreciation, your rate of increase includes how much you actually borrowed. So if your home is, say, 800,000, if it appreciate by double, like if you hold it for 10 years, 15 years, you would never have achieved that based on just your own savings and your own investment in the stock market. Let's put it that way in a nutshell.
NVIDIA entered the chat.
No, there are exceptions.
So let's
there are
say-
exceptions.
Let's say you save a little bit of money now on your monthly, like because you're doing a 35 instead of a 25. However many, maybe you're saving like $200 or $300 a month, and you can put that into investments or TFSA or whatever it is, right? So in that sense, you are saving money, and hopefully that helps as well. So there are benefits as well. Yeah. All right, on to the next topic. So we're talking about what's happening in immigration. Our Prime Minister, Justin Trudeau, has finally acknowledged that the population growth is actually too rapid. But it was something that he was pushing for 500,000 every year, finally to the realization of our Prime Minister that maybe it's something to address. What he's actually doing is he's trying to reduce immigration. For 2025, the international student permits is going to be lowered by 10%. And from this year's levels, and then maintaining that level all the way through to 2026. Just based on this number, this is supposed to represent a 36% decline from 2023. In my opinion, I think that this here, the damage is already done. They've already allowed all this to happen, all these permits, all these loopholes to occur, and it's almost impossible to kick
So that's just international students, right?
international students and also work permits as well. But yeah, like what are you guys thinking about the
Well,
it's a good thing?
The international student thing, yeah, for sure. I mean, it's just gonna what the biggest impact I see immediately, tenant demand for rentals, for sure. And right now we have a lot of inventory too for rentals. The demand is actually like spread out because I feel like with so much more deliveries with new condos on the market, plus current inventory on the market that's being rented out again, right? It's just the prices are starting to come down. We're starting to see that come down, which is a good thing because it's now more manageable for people who are looking to rent. I mean, otherwise, that's the only impact that I can think of off the top of my head.
So you're saying there's more inventory now? That's actually interesting that you mentioned that because there's more inventory, but yet all the owners are being super picky.
Correct. Yeah. Well, that makes a lot of sense too.
like, I mean, how often do you have a landlord that's interested in taking in 6 students into like a 1-bedroom?
I have a lot of students that come in like groups of 6 or 8. I had one 9. And I'm like,
Yeah, I think that's a little different though. Because
how am I going to find you guys a house? Like, there's 9 of you, and you're all students,
And everyone's willing to pay
and,
$300.
and they don't have any income. You know what I mean? There's nothing to
Yeah.
show a landlord. So that's the challenge we face as realtors. I don't know about you guys, but for me, right? So, and I do work with a lot of international students, but But I'm seeing bigger numbers, bigger groups.
Whenever a call comes in saying that they're students, it's usually a decline, unless they're able to pay for half a year or maybe the year up front. Maybe it starts a conversation, but because if you have so many, the house becomes banged up and it gets abused.
Yeah.
And there's really no maintenance to landscaping and the cleanliness, like the hygiene in the house.
Yeah, I mean, the landlord doesn't have an
nasty.
incentive to take care of it too, because he knows it's going to be trashed. They know it's going to be trashed,
Yeah.
right? So
Yeah.
why even take care of the outside? Because it looks like crap on the
There's
inside.
nothing you can do. Yeah.
Yeah.
If you're an international student, like,
What are the options?
yeah, what are your options?
It's a tough one. I mean,
Purpose-built apartments, maybe.
There's a lot of international students that are currently renting still right now in our market.
Yeah.
Basements.
No, they're renting out condos. They're renting out, you know,
Whatever it may be.
like
yeah.
or whatever supplies available on the market. They'll still look at. I mean, there are still ways to kind of work around it, right? Like you said, offer some. Well, the tenant's got to offer prepaid rent,
Yeah.
right?
Yeah,
Maybe 6
yeah.
months,
For security.
1
For
year.
for security.
Like the main
you know.
reason why this is actually happening, it's not because the government's encouraging it, but it's because landlords have zero security. There's no guarantor. They don't work.
No
they have
job.
no income.
Right.
What is landlord like? Why trust a kid that just came like 20 days ago?
Right.
Right?
I think I think legitimately though, it's better to be transparent. If you are to rent to one student or two, you might as well just say, you know what, pay a little extra, because I know students, they talk when they go to school. They're gonna join with their friends and move in or just
Yeah.
take the couch
Mhm.
anyways. So if it's gonna happen, if you're gonna have one or two, you might as well say, hey, you know what, if you have friends and guests come over, it's fine, but maybe offer more. But just be transparent. And then you're going to be telling that to insurance as well. I have students in there. I can't control their guests. So
there's a problem with that though, because if it starts to get overcrowding, it becomes a fire hazard.
but they have they have tenant insurance too.
It doesn't matter.
Well, fire insurance is different.
Fire,
It's from landlords.
it won't cover.
Have you seen it personally, anecdotally? Have you seen students that say do that, where starts with 3, and all of a sudden
I
there's like
have
7?
Seven
well,
or
okay,
eight.
not 7's a little extreme, but they would bring their boyfriend, their boyfriend's friend, and then a dog.
But
Like, it's
live
not-
there, like actually
live there.
occupy.
Oh, yeah.
and
Oh,
now
yeah.
become the
Full on
tenants as
tenant.
well.
Yeah, full on
Really?
tenant. Like I manage clients' properties, and I make sure that the rent gets paid, and then certain things get repaired. But in terms of how they live and who comes in, and none of the business of the owner to track who's coming in, coming
Unless
out.
it's a fire hazard.
Unless it's a fire hazard or there's complaints, then everything's good. But usually tenants, they're generally pretty good about these guests and abuses. So
My experience is like whenever we hear horror stories of like these students, because they don't know the culture, they don't know the rules. Once they're in, they just go all out. They just trash the place. There's no respect. They pay they're like, oh, I already paid my rent, and then what? Like, what are you gonna do? Like, you can't go in there as a landlord, so they're kind of stuck. Right?
I don't know what you guys feel or how you guys feel about it, but I'm starting to recognize something a little bit different. Is that there's a lot of inventory in the market right now because there were a lot of investors that were holding on to all these properties. But now that these investors are trying to release their properties, what is the real demand for housing? Well, we've been talking about like, oh yeah, we have a shortage of housing, we have a shortage of housing, we have a shortage of housing. But the shortage of housing was created because of investors. Like they invested a lot of money into housing and not actually using it for themselves. Now the investors are releasing this back onto the market. Is there still a housing problem that we have?
Like, who's actually buying properties?
So
That's what
these
you're saying.
investors, you're saying, do you think they took out a mortgage, or is it like just cash purchases?
Well, I'm sure they got their financing somewhere. Nobody's really going to use all their money to buy their property, right? They may start to slowly pay it back down over time. But regardless, is that now I feel like there's a bigger volume of supply, but the demand isn't there, right? We were now at what, 6 months or about 5 months of supply right now. And for condos, we're averaging about 9 months of supply. Where are we at with supply and demand issue right now?
Did you guys mention about pre-construction? Like there maybe a few years of inventory, right? That accrued. And
Actually, it's so funny because I think there was only like 500 pre-construction sales in the month of August.
Wow.
Yeah,
Times have changed.
all of Greater Toronto area was only 500.
Is that right?
Yeah.
No, it sounds about right actually.
I kind of believe it because
Yeah.
man, how many people are actually really buying pre-construction right now?
Yeah, that's a good point.
But they're buying for closing in 4 years, 5 years. If they were buying it today,
It's a very specific niche market.
I think the people
would
that are
buy.
buying now are probably buying for like their family, like down the road. They don't want to get a mortgage right now. They want to get a mortgage like 3 or 4, 5 years down the road. So,
but even buyers now, there's no guarantee that the project might get built. I think that's the
well, there's a
The
lot
environment.
of like people just not having a lot of confidence in pre-construction right now.
So I actually mentioned this earlier in our discussion that housing starts have dramatically slowed down year over year, comparing like the last 2 years at least. That means, developer confidence. Even if they do own land, they're not pushing forward with the projects and permits. So there's sufficient right now in the market to fulfill the immediate demand. But the problem is the lending and the closing. So the buyers are not able to even get in. So hopefully these measures, maybe in a couple of years, it trickles down. Buyers realize, okay, maybe I can get into the market, and then the absorption rate, it improves. So for many of the projects, the market starts
Okay, well, I
digesting.
mean, I think my initial conversation was really more about the supply and demand issue and the influx of immigration and how we felt like we had a shortage of supply. And now I think we have more supply than we really need, right? Especially if they're reducing foreign workers, foreign students. So do you guys feel that there is too much supply in the market right now? Or do you feel like people are just still holding back and waiting? Like what's your sentiment with the marketplace?
Yeah, there's definitely like not enough demand for the supply right now. It also doesn't help that a lot of people are renewing their mortgages at a higher rate. It's hitting them really hard too, right? So I think if they can't afford it and they're not getting good quality tenants, might as well just sell it. I think that's one of the reasons why people are putting it on the market, like a portion of it.
It's a bit of a squeeze because there's a shortage of housing for the amount of population, but there's oversupply for the people being able to afford it. So even though that they have, X amount of available homes versus the population growth, they can't get into these homes because of financing, employment, whatever the reason. So unless they meet at some point.
Yeah,
Right.
no, I think I hear what you're saying. I think you're right on that. Like there's probably not enough supply still with the amount of people that's coming in, or even if what's available now, right? Forget about new incomers. You're right. The affordability factor is still a big problem because the salaries isn't meeting the standards that we need to afford the housing. You still need to have like combos.
So it's like two conversations, but we really have to link and interpret what we're looking at, because why are we having oversupply and people can't get in because of affordability?
Yeah, a lot of it too is I see it personally. So it's not that they can't afford a condo, or they can afford a condo, but they don't want the condo, right? That's entry level. They don't want that. Like we're talking about the car analogy, they want the Lamborghini. So a lot of them are going to sit on the fence for a few years, save, maybe combine their income with a parent or co-signer later down the road, and get the townhouse or condo townhouse, right? Not the actual condo apartment. So that's the reason why I think a lot of inventory is sitting as well. It's just what they want, right? It's the demand is there, but not for that product. So the quality of the inventory, there is a lack of inventory, to your point, I still think, overall in the country. But there's a lack of good inventory as well that's available that people want to actually buy.
I feel like with the condos today, there are a lot more supply. And you're right. I think people are looking at it as if it was a less desirable product to pick up because one, they think it's probably overpriced. Two, that maybe they don't feel like it's the long term, or they're not going to gain equity in the condo apartments today, right? Because it's going to take 3-4 years for them to actually move, for them to get some real
What they
equity.
really want, yeah.
Yeah, it's going to get them real equity from the property. But I think if you're purchasing it for yourself, I mean, don't look at it from an equity standpoint. Like look at it as if it's a fit for you or not, right? Is it the right product for you? Like, if you're a single person or even a young couple, like, hey, you know what, a 1-bedroom and den or a 2-bedroom could be a good fit, right? And then slowly eventually grow into something bigger. But I mean, I think it's got to be your own personal preference, but you got to bring the value. Obviously the value's got to be there, but at the end of the day, you got to look long term and not think, oh, in 3-4 years from now, is it going to actually gain equity? right? Yeah, like if you want to do that with the step up process, yeah, we'll look into a different type of product, like a condo townhome versus like a condo apartment, right? But that's, different thinkings, right? You have different type of buyers.
Like, just kind of staying on the topic here. I think the previous topic we were talking about was the mortgage rules changing from 25 to 35 years amortization. So I think that would help just the general population help absorb some of the inventory when it becomes implemented. So being able to get that first step, don't look at it as a 1 or 2 years type of situation. Like whenever you're buying a home, always kind of look for long term. You hold long enough, it's going to go up. If you're trying to flip it within 6 months, 1 year, year and a half, it's not the greatest strategy because you're just going to, you might even lose money if that's what your plan is, right?
Yeah. The other downside of why people don't want to look at condo apartments is because of the maintenance fees, right? Is that what you guys feel that?
Absolutely, yeah.
It's pretty high.
You know what I mean?
Yeah.
But here's the thing is that I was talking to someone recently is that like, oh, maintenance fees, this, I don't want to buy condos because the maintenance fees is not, I'm okay. Well, yeah, I understand you have to pay maintenance fees and they're worried that the maintenance fees are going to go up significantly every year, right? Yeah, it's going to go up, but marginally. It's all based on inflation anyways. And the thing is that like we look at condos today, there's some condos that are 20 years old that still have very good maintenance fees or the maintenance fees are still really, really like low.
Yeah.
Right. But then there's some that are newer and their maintenance fees are like astronomical. One thing you should really look at when you are looking at maintenance fees is what the price per square foot is on your maintenance fees.
Good point.
Yeah.
Because, a lot of times people are like, okay, well, I want to look at a condo, but I don't want maintenance fees any more than $500. And that's the old thinking. And everyone was looking at this number. And I was like talking to them like, okay, well, let's look at if you had a condo apartment that's 540 square feet and the maintenance fee was $550, is that acceptable for you or not? It's like, yeah, it is. Okay, let's work out the dollar per square foot.
Yeah.
Right. And it's like, it's
expensive.
$1. It's over $1 per square foot on your maintenance fees. But if you look at an 800 square foot condo apartment and the maintenance fee is like $660, is that more or less than then you work out the numbers and it's like, oh, it works out to be a much less dollar per square foot. Just for public information, like evaluate the dollar per square foot, your maintenance fees, and then, evaluate if it's a high or low.
And also what's included too.
Yeah.
Some
Definitely.
buildings
That's
include
true.
water, hydro, electricity, and cable TV and internet.
It's true.
Mhm.
Yeah.
Yeah.
So-
So just different things to look at.
It's a good point.
So let's talk about the next topic here. And, another big news that came up recently this week,
Yeah.
the U.S., they cut their rates by 0.5 basis points.
It's pretty
Right,
big
so-
news. Yeah.
Yeah. How do you think that would impact our market? Thoughts?
Well,
Positive.
Canada should follow in their aggressive style too. Like we're I think for the next cut, I think we're expecting like a similar, maybe 0.5 as well.
I think so, too.
Yeah.
I think because recently they announced that our inflation was down to 2%.
Just
or-
around
yeah.
2%. Yeah.
Yeah, that's actually a really good thing because now we can finally decrease the rates and make things a lot more affordable, or hopefully make things more affordable, have more money, more cash in the market.
Yeah, definitely.
Back to the good old days.
I don't know about good old days, but at least something that's a little bit more relieving.
Yeah, I think it's just right now people are like just struggling. Like me and myself, I'm on variable rate, so I actually feel each rate what they
That's
cut.
good. Yeah, it's good for you.
So hey, you know what? Like I feel pretty good right now.
That's good. Yeah, yeah.
But
Did you say good for you? I'm struggling. Good for you.
All you fixed rate
That's what-
guys.
No, I'm variable
No,
too,
no.
man.
Good
no
for
one said
you.
I was struggling.
Good for you.
It's just like, hey, you know what? I feel every.
But you know what?
every
If they
cut,
if they
which is
went,
good.
It helps, man. Every
does.
quarter
Yeah.
point, every quarter point, every quarter point.
Well, you actually feel it
Yeah.
immediately,
Mhm.
right? So you actually see it on the bill. So I think it's a good thing. It's necessary. Not only would it help just like in the real estate, it helps with like people borrowing money,
Sure.
car loans. It helps everything in every aspect. Groceries, all that stuff. It would help, right? So
Yeah.
hopefully,
that's for sure.
yeah.
Yeah, I agree. But do you think it would stabilize around 3.75? So if we're at 4.25 right now, the Bank of Canada rate, if it goes down by 0.5, it'd be at 3.75.
Well, there's some analysis are saying could go lower than that. So
It probably can go lower.
yeah, probably could go lower. Yeah. So
Yeah.
another rate cut this year and then several more next year. Yeah.
Well, we have two more chances of rate cuts in Canada. because one's in October, and then likely they're going to announce it again in December if they're going to hold or drop or increase. I don't think they're going to increase.
right.
But yeah.
So I guess it's, are they going to do 0.25 twice, or are they going to do 0.5 and then 0.25? I don't know.
I don't know, because I think with the U.S. Feds, they're talking about lowering their rates another 0.5
Yeah.
because they're decreasing. We're likely going to follow, because if we don't follow, then we're just going to lag behind, right? And our economics are so tied to the U.S. Good and bad thing. It's good in terms of our personal living, that like it's going to be a little more relieving. Bad in the sense that, hey, you know what? They're expecting a recession down there, right, in the U.S., and that's going to be a bad thing for the global economics, for everything. But in the end, I think for us on a day-to-day, the drop is going to feel a little bit more relieving, especially even with our own like personal business, right? We're going to see a lot more activity, right? People are going to start, buying and selling a lot more, and that's going to be I think that's going to be a positive thing.
Yeah, it helps affordability too. Like people that were on the sidelines looking to buy something, maybe they weren't able to buy something earlier. With these rate cuts, they can qualify for a little bit more, and hopefully they can get their foot through the door.
Yeah, I mean, what's the lowest rate that you're seeing right now? What are you guys seeing?
High fours, I think.
I think I'm seeing like mid fours right now, like 4.5.
Yeah.
I've had clients actually report to me saying that they renewed on a renewal 4.28
On a fixed 5 year.
on a fixed 5 year,
That's
and with
really good
Four
rate.
point two eight.
with
Really good.
with
That's pretty good.
transfer bonus for 4,000 or 5,000.
Okay, interesting.
I can tell you the bank privately.
That's good. That's really good. So it's just gonna slowly
we're
come down.
Good, yeah, better signs than before for sure.
Yeah, for sure. Let's look at some projections to the end of the year right now. So do you think that the inventory levels are gonna start decreasing, because we're at about, I think, 23,000 active listings currently, or just under that? So if that's the case, like, do you think it's gonna be by January, let's say, right? Do you think it's gonna be lower than that? Do you think condo market's gonna come down, like in terms of their inventory levels, right? Do you think they're gonna come down? What's your projections?
I feel like just based on some of the rates and people hanging on, it's going to increase before it goes down. Unfortunately, like probably next spring we're going to have more activity, but this year is kind of a slower year. That's my take. How about you guys?
So your take was that
Increase.
it's slower. It's gonna
Cool.
More supply.
We're talking about
More
inventory
supply.
supply.
There's gonna be more supply.
That's for me.
I think it'll be pretty stable. Like fall market generally is a little bit more active, but I think this fall it's gonna be slightly better than summer, but probably not that much. I think the inventory level might actually increase as well, because people are like, oh, it's a good time to list it, but the demand's still not there.
Yeah, I think we're going to stabilize. I think heading into the Christmas season, I think it's generally a slower time, at least for me. So I think we're going to stay where it's at in terms of inventory and demand as well.
Interesting you say that, because I'm noticing properties in York Region where they're getting multiple offers again.
I was just gonna say, I'm
Like
I'm
yesterday, there was 4 offers on a property in Aurora, so activity's picked up.
Are the prices at market price or artificially low?
No,
Like,
it's
how do you-
artificially low, but they tried the same strategy in the summer, it didn't work, and they tried it now and it worked. So
Well, no, I think that's true that there's 4 or 5, but I mean, we're used to a market where there's 20, right?
But
That's
we're
right. Like,
we're,
there's-
we're moving from
so-
again. I think what's happening now is I think we're moving from a balanced market back into a seller's market, so to speak, right? Because if the bid wars are working,
Yeah.
that's a sign that the seller's market is actually working.
thanks for selling. Like
Yeah.
I'll try to book
Yeah.
a place and they'll say,
Yeah,
oh,
that's
sorry,
true.
we received a firm offer yesterday. We're just waiting for
Yeah.
a deposit. So I'm seeing that more now.
Okay.
So I think we're coming up on time.
So
any more?
my personal take on the inventory level, I think, like to Kenny's point, is I'm actually seeing, and when I'm my feet are on the ground talking to a lot of people, and there's actually a lot more people that are interested with learning and figuring out what they want to do with the home purchase and even selling, right? So I think there's a lot more activity, and we're in September right now, we still have October and November before December really hits. I say things really start slowing down around like mid-November, right, for that winter season. So we have about 2 months between now and then for the inventory to kind of absorb. I think the inventory level is actually going to go down
Me too.
because
I think it'll go
if
down.
we see interest rate drops in October, I think we're going to see even more activity happen.
More sellers being able to sell their property, right?
Sellers are getting the numbers that they want finally, and buyers are feeling, okay, I can afford this, right? So it's kind of like that middle ground right now. So I think that that's just my take, right? Like, hey, everyone has their opinion.
Yeah, things are not on fire, but things
Yeah.
are selling better than a couple months ago, and it'll probably pick up in the spring. Yeah, that's what I
So
think.
this is a true fall market. Like, is it a normal fall market or a little bit slower?
I don't know. You know what? Honestly, like you're talking about the cycles, and like, when's the last time you seen a real cycle, like a real proper
That's a
cycle,
good point. Good point.
right? Like
When winters go crazy,
Yeah.
when winters, January,
I know.
February is
I know,
really busy, and
COVID,
then
like, oh man.
yeah, since
Christmas
COVID,
time,
everything's been like all whacked out.
Yeah,
right?
yeah. So
I mean, fall's
fair.
been
Yeah, what's
like
a
last
normal
fall
market?
was really slow because of the rate increases, right? So that wasn't a
Yeah.
true fall.
And then
Yeah.
the summer was busier than the fall.
Mm-hmm.
So how does that?
It was a pretty weird year last year too.
True,
Yeah.
true. So we're coming
So-
up on time. Any final thoughts?
Nope,
No,
that's it.
I'm good,
That's
man. I think I
Alright,
said my
until
piece.
next
I'm
time.
good. Till next
Like,
time.
subscribe, and share, and
Let's do this.
follow us.
All right.
the more you
Alright.
know.
Thank you,
More
guys.